Hi, this is Zach Meir from Master Investor. We'll look at some bulletin board hero stocks on Tuesday, the 17th of February. I'm starting off with Kenmare Resources, where it looks as though we've got an extended base here, the floor of a rising trend channel that you can draw on the daily chart from November. Inverted head and shoulders type movement here, the right hand shoulder breaking the 50-day moving average late last week at 3.2 pence, and this extended base along the floor of the channel also quite encouraging as well. The view at the moment is that while there's no end of day close back below the 50-day line, we'll be looking for an extended move towards an implied target as high as the 200-day moving average at 8.82 pence, perhaps as high as the top of the channel itself at 10 pence over the next 1 to 2 months. If you're cautious on the shares, maybe you'd wait on a dip towards the 50-day line to cool off the overbought RSI at 70, but it does look as though we've got enough here in terms of positive or improving technicals to take the shares higher. Next up is Madagascar Oil, which is also a stock which has been in the wars over the recent past. You can see this quite persistent downtrend that we've had from the autumn and going into the start of this year. Just the signs, first sign of bubbling to the upside here. A few candles there looking more positive at the floor of this channel. Also, we rebounded off a really oversold RSI level, practically zero. So there could be some pent-up momentum, positive momentum coming through there. Actually, I've got a MACD buy signal as well over the last few days. If you're cautious on the shares, which probably most people would be, you'd wait for an end-of-day close above the 20-day moving average shown here in grey at 4.05 pence. But there is a chance that, say, aggressive bulls might be looking to go long with their stop loss just below recent support around 3.25 pence, which wouldn't be a bad risk-reward trade if we get up to the implied area of the target at the top of last year's channel as high as 7 pence over the next 1 to 2 months as well. So buy trigger there, 20-day moving average target towards 7 pence, which was also the old October support zone up to the 7 and 8 pence as well. So it sort of ties in on a charting basis. Next up is Red Emperor, where we've had the shares spike up yesterday in quite a positive way. What I like about this situation here is that we've had an unfilled gap through the 50-day moving average, 1.54 pence. That looks like it's quite a decent or a deliberate, let's say, move there, or sustainable move there for the bulls. W-shaped reversal here as well from the December support and the middle of that formation in January, and then going into this break that we've seen to the upside here. And also, it's normally the case if you get a decent daily candle above the 50-day moving average, that is a sustainable or persistent sign of a turnaround there, which would better what we saw at the end of January, where there was that false break through the 50-day line. Initial target, the 200-day moving average shown here in black at 2.5 pence, but I am looking for an extended move here towards 4.5 pence, which would be the top of a September 2013 price channel target, maybe to be hit over, say, March, April, more by the end of April, if we can break this 200-day line relatively quickly over the next couple of weeks. As I said, the stop loss would be an end-of-day close back below the 50-day moving average at 1.54 pence. Finishing off with what seems to be a big favourite on Twitter at the moment, or has been for quite some time, Union Jack Oil. Just thought I'd follow up on this. Hasn't really moved in maybe the way that the fans of the stock might have liked. They're probably already hoping that it'd be up at 0.5 pence after all the consolidation that we've seen over the past year. But the thing to note at the moment really is the 50-day moving average at 0.2 pence. That's the major support here for the share. Seems to be holding relatively well. We've had this break above the green 10-day moving average to start this week. Also encouraging the RSI rebound off neutral RSI 50 to leave the RSI now at 58. 58 tends to, the upper 50s, or the 50 to 60 band tends to be a good place for non-volatile buying of a stock on market. So that sort of ties in with the overall recovery idea that we have here. If you're cautious on the shares, you'll probably still be waiting on a weekly close above the 200-day moving average at 0.28 pence, but that's at least the initial target as the shares attempt to recover. my best call on the shares, or the most optimistic one, would be that they would hit this rising trend line from September up to 0.55 pence over the next couple of months, but that would of course be reliant on a relatively quick break of this 200-day line, which has been resistance since October. That's it from me. More updates at masterinvestor.co.uk.